Joining me now is Robert Powell, Finstream.tv co-founder, and Jeff Levine, Buckingham Strategic Wealth Chief Planning Officer. Ahead of the filing, Jeff, what should taxpayers keep in mind when it comes to contributions, let's say?
Sure. I mean, we have a limited amount of time left to make those last-minute contributions to potentially reduce your 2022 tax liability. Now, of course, we're more than 3 months into 2023 already, so there isn't a ton you can do now to lower last year's tax liability. But among those things remains deductible IRA contributions, which can be made up till the filing deadline. Remains HSA contributions if you were enrolled in a high deductible HSA eligible plan last year. If you're a business owner making contributions to a SEP IRA or a profit sharing plan, a similar type of plan. And then finally, the ability for certain business owners to make certain tax elections like accelerated depreciation. All of that can be done now, today, to reduce your tax liability for last year.
Robert, some may wonder, hey, why is my tax refund not the same as it was the year before? What are some of the reasons why maybe there's a little bit of shock when you do your taxes and you find out that Uncle Sam isn't giving you as much back?
There could be a couple reasons. One is the fact that maybe you earned more income, and because of the way the tax code works, the liability that you paid throughout the year is far greater, and the amount that you'll be getting in return is far less. The other is that you may have gone into your employee benefit department at the start of the year and changed your withholding to accommodate what you thought was going to happen. And that number that you readjusted your withholding to probably was different. The outcome was different than what you would have expected.
Jeff, what about tax credits like a child credit?
Yeah, these are things that can change from one year to the next. For instance, you may have a child that gets too old to qualify for the child tax credit, or you may have a child that gets too old to qualify for the dependent and care credit. So credits are dollar for dollar reductions in your tax liability. So if you lose out on a credit in 1 year versus the last, it can have a much more impactful change on your ultimate tax liability than, say, being phased out of a deduction. Because again, the credits are a dollar for dollar reduction in your taxes.
And Robert, as far as a refund or perhaps if you owe this year, what are some ways that may be unexpected to increase your refund or to decrease the amount that you owe the government?
Well, I think many people are just subject to the standard deduction now. So the ability to accelerate income or accelerate deductions or bunch deductions is limited to maybe 5% of taxpayers. So the ability to sort of increase your refund or reduce it really is a matter of adjusting your withholding with your employee benefit department. And I'd say if the one last thing I might mention, too, is if you're having trouble getting your tax return done, you can file for an extension, but you should go through all the processes to find out what you do owe Uncle Sam and pay that amount by tax day. Otherwise, you'll be subject to penalties.
So aren't you essentially, though, doing your refunds because you have to figure out how much you're going to owe?
You're doing
it. I mean, it's like kind of like back of the envelope kind of calculations. Okay, here you go. This is how much I owe.
Mm-hmm. Yes, I mean, you could face if you've underpaid, you'll have an underpayment penalty. It may not be a lot for some people, but it could be a lot for others too, especially folks who might be self-employed, where they maybe failed to pay a quarterly tax payment, or they didn't quite figure out the formula for paying their quarterly tax payments.
But Robert, just one quick note on this extension, though. My feeling has always been, if you extend, you're going to raise a red flag to the IRS to audit you later on. Is that completely unfounded, or is there something to that?
I think if you're a typical W-2 wage earner, that if you file for an extension, you have nothing to worry about. If, on the other hand, you're filing and you have a very complicated return, you own multiple LLCs, you have various deductions that can be challenged, then you probably could be raising a red flag. But I think for most average people who are filing an extension, they have nothing to worry about.
And Jeff, some people moved out of state last year during the pandemic. I mean, how significant is it that you have to file correctly within the state that you are now residing in? What should people watch out for?
There's a lot there to think about because you not only have to worry about where you are today, but also where you were part of, let's say, last year. You might have to file a multi-state return, which can bring all sorts of nuances into it. And a lot of times people think like, hey, I spent 180 days plus in this new place, therefore I don't have to worry about this old place. And that's not true. One of the things that trips a lot of people up is there's this term called domicile. And domicile is effectively a nebulous type of thing where it's the place that you intend to effectively return one day. And so sometimes a state may consider you domiciled in your current location, even if you spent most of the year in another place. And that can lead you to file taxes again in multiple states. You end up in most cases paying the higher of the two state taxes for a lot of these things. So it definitely increases the complexity of the return. And you want to make sure one thing is absolutely critical is that if you pay taxes to one state, oftentimes another state will give you a credit for those taxes paid. Not all, but a lot of times there's a credit available, and you don't want to miss that credit because it can be quite a bit of money, especially for higher earning taxpayers.
A lot to think about for this tax season. Thanks so much. With just a few days to go, guys. Thank you to Robert Powell, Finstream.tv co-founder, and Jeffrey Levine, Buckingham Strategic Wealth Chief Planning Officer.